We now move on to the panel discussion on sustainable growth and profitability, a fresh look at business strategy in the digital age. This session aims to explore strategies for embracing digital innovation and technology within the banking, financial services, and insurance sectors. We'll navigate through the evolving regulatory landscape, underscoring the critical importance of fintech partnerships. Additionally, we delve into the role of technology in fostering financial inclusion and equitable access to services, alongside analyzing international trends in the BFSI sector and strategies poised for global market expansion. Ladies and gentlemen, let's give a big round of applause to the panelists. The session is being moderated by Shashank Shekhar.
In the age of digital, you still have to rely on certain physical items. So please bear with us. Okay. So I think this is very interesting panel where that very rarely you find leader from banking, insurance, mutual fund, as well as then you see fintech founder sharing the dashboard, right? It's my privilege to have a good discussion around with these leaders. And topic is very relevant. Like in the last 10 years, if you look at it, the kind of the digitization has happened in the country, right? Especially, and then contributed by the digital public infrastructure, the kind of the infrastructure that government has set it up, and financial institutions heavily using them to build into the part of their business processes. And digital has become almost like a part of the digital business strategy. So with that, I'll just start the discussions and pick it from Anshul. Nothing in the order, but I just wanted to start with the banking perspective, right? And especially the small finance banks, typically, how do you see that digital being a strength and being a part of the digital business agenda, right? How do you see that digital is contributing to that? And if you can guide us on the whole process of the imbibing the digital overall as a part of your business agenda, contributing towards the growth part of it.
Hello. Thanks. See, luckily for all banks, be it small finance banks or any other banking license, our regulator has always been clear that banking needs to be a profitable business. It needs to be a business which needs to take care of all the requirements, be it in India or be it in Bharat, as we can probably loosely call the urban space and the rural space. And hence, any kind of growth in the banking segment cannot be done without going digital, without trying to be as paperless as possible, without trying to reduce the cost of delivery as far as the customer is concerned. Now, over the last 10 years, the kind of rails which has been created in the country with respect to starting with Aadhaar, then UPI, account aggregators, this whole ecosystem actually has helped small finance banks specifically reach out to the underserved population or to small businesses across tier 4, 5, 6 towns as well as rural areas through a medium which can be, if I may say, optimal from a cost as well as delivery perspective. And hence, we're very clear that in our own journey, what we are trying to do is that chip away at everything, try and make it as digital as possible, try and make it as paperless as possible. So for example, today, even when we open savings accounts in our own branches, we've absolutely removed the application form. Because unless you do take those kind of calls, and I'll be honest, it's easier for somebody who's smaller and who's starting out now, probably difficult when you have legacy, that you remove that option. So today, if you walk into any of our branches, the process will be completely digital. You will do your Aadhaar biometric, you will do e-sign. So the whole intention, and this is just one small example of it, that the rails now exist to help the banking industry do everything as far as individuals are concerned in a purely digital way. And future growth and future profitable growth And that's now become a mantra for practically all parts of the industry. For the banks or the regulated entities, it was always there. Cannot be achieved without going digital.
Yeah, thanks. Thanks. So with that note, I'll come to Anurag. Anurag, you have been a banker as well as you have built it one of the unicorn fintech, and you have imbibed the technologies. But how do you see the technology innovations as a critical component in driving the growth?
Okay, so just to pick up what Anshul said, just like regulator expects banks to be profitable, I think the way fintech and RE partnership structure has to survive, the fintechs have to be sustainable. I think that is an overarching theme. But I've got 3 points to make the question you asked, Shashank. The first is technology in banking or BFSI is not new. It's been around for many years. If you look at the IT services companies, the biggest vertical they serve is BFSI. And the reason is because BFSI by design is scale business and complex, and you need technology to manage that. I think what has changed in last few years is that tech, which was largely a backend or a middleware technology, has now come in the front end, and it is now in the hands of customer. And that's the one area we have to appreciate. So from just, it has always reduced cost for the ecosystem, but now it is also driving penetration and inclusion because it's now in the front end. That's one element to it. Second, I think we are also lucky to have an extremely young nation, and that is what fueling the adoption of these technologies even faster in the hands of customers. 33% of the world population below 30 years is sitting in India. 20% of the fresh new population is getting created in this. Now that's how young we are. Okay. So naturally, the adoption curve is very fast. As some of these technology, whatever is being done, suddenly are making sense because the adoption curves are faster. If you would have launched this technology 5-6 years back, probably the adoption won't be that. The last and not the least, the most important thing is that availability of digital public infrastructure. A lot of this penetration and the technology in the front end, what we spoke about, which is for which all this fintech industry exists, primarily owes their, I think, credit to DPI. And DPI has two sets. One is, of course, one can build APIs and then offer a service to that. It is also driving consumer mindset that, okay, if I can do this on digital, why can't I do banking on digital? So it's like that. So it's like a virtuous loop. And just to end my question here is that, majority of the financial services innovation has come from developed world to developing world in the recent past. But fintech is a very different animal because in our markets, there is a large penetration problem to solve. So when I talk to my counterparts in US and all, the primary thought is, how can we win against the bank? While in most of the developing world, we are actually craving for fintech partnership, bank partnership. So it's actually a very different thought process has to emerge where both the parties play the role and how can we make a viable business model and drive penetration. And that's how I see this.
Well, thanks, Anurag. I'll come back to the questions, same questions to Raghav and Vineet. Anurag touched upon the young population and the adoption curve, right? How do you see the digital affecting that adoption curve in the mutual fund industry? And then Vineet, I'll come back to with the insurance and how digital is helping that.
I think the mutual fund industry is walking, talking, living example of how customer multiplication can happen. Not too long ago, we were less than 1 crore customers, unique customers. Today, we are about 4.2. I think our big moment happened in Demon. After that, I think one thing, money started coming out of closets and started getting invested into financial instruments, mutual funds were there. I think COVID was an unfortunate tragedy for many people, but for the MF industry, because we are digi-ready, it really helped us. And of course, it also helped that the architecture was already there. I mean, today we have 100 branches odd in the country as Axis Mutual Fund. We just closed a massive fundraise about 2 months back. I collected money from 560 locations. That would not have happened if there was no digital. 5 years back, 50% of our applications used to come in paper. Today, 4% of our applications come in paper. 96% is straight through and done. 10 years back, we were yet giving redemptions in the form of paper checks with all the transit delays of courier and everything. Today, the same time that, let's say, a large corporate investor gets his money credited at 9 a.m. in the morning or 8:30 in the morning, Raghav Iyengar with a 1,000 rupee redemption will also get money at the same time. So it's actually pretty much simplified the whole thing. On the other side, the regulators also done a fabulous job because they just completely simplified the product structure. So today, if you ask me what it has led to is obviously massive multiplication. What it has helped me to do is that instead of having a 5,000 rupee minimum ticket, I can now start offering services at 100 rupee per ticket. So I'm really going down to the bottom of the pyramid. I mean, today Anurag talks about tier 5, tier 6 towns. I don't think the mutual fund industry has gone below tier 3 today, to all practical purposes. So I think in some sense the sky's the limit and digital has helped. The flip side of digital is it's becoming very expensive and our margins are shrinking. The moment you have passive funds or you have other plans, I think the margins in the industry are going down. So I think the trick for us is to try and calibrate what we do and not sort of blindly just go behind something which is fashionable. Cyber crime is going up, AI is creating a lot of issues. I think the maximum additions in the mutual fund teams, apart from business, is now in compliance and risk, which basically talks a lot about this risk. So I think that's the flip side of it. I think the key thing is, but I don't see a problem on profitability because we are yet a very young business. I think we just crossed a 50 lakh crore kind of AUM in the industry. I think we have a long, long way to go to get there.
No, thanks, Raghav. And same, Vinit, it's always perceived, right, insurance is less penetrated market and also the gross premium vis-a-vis percent of GDP. Now it's growing. So, but how do you see the adoption curve is growing and how the digital is contributing to that adoption curve?
So I think similar to the other panelists, digital is part and parcel of everything we do. So there is, hardly any paper in office nowadays. No application comes on a paper application. It's all digital. So I think all that movement has happened, and I would say that is like the phase that has happened so far. And the future might be very different from what we have done already. The fact is that there are multiple places where digital has really helped insurance companies go deeper, which is part of your growth and also become more profitable, or let's say becoming much more relevant for the customer. So first, I think on the growth side, it's really helped us go much more deeper. Similar example to what Raghav said, that you have few branches, but your reach is maybe 10x of your branches might be, just because your agents and your people are available and they can fulfill something through a digital medium. So I think that's clearly one use case where customers have benefited. From a penetration perspective, there are a lot of these attachment products which come in along with loans and everything else, which really take the penetration much deeper than what we might get to see in the retail numbers that are usually published. So I think penetration of insurance using digital is really high because we do insure a large number of customers, and those it's much larger than mutual funds also, that as a book itself, HDFC Life has more than 10 crore customers today, who we are covering in life. So I think that itself becomes a large piece that can happen only if there is digital. Second part, I think I want to talk about the profitability, and also maybe a little bit touching upon what Raghav said, that digital becomes expensive because a lot of it is now becoming hygiene. From a customer experience perspective, you have to keep on moving ahead. You cannot just say that, I've done this process, it is automated, but customer expectation is changing as fast as what technology is changing, and that is putting pressure on you to, redo a lot of things that you might have done in an earlier thing. And that's where I think the cost escalation of digital is coming in a very different fashion. Risk, yes, is different from what it used to be earlier, so you have to manage risk in a different fashion. I think on the profitability side, because we as an insurance company also underwrite a lot of risk, digital and the data availability through the various government stacks, etc., available, and through what customer declares, is making it possible for us to price it even finer. Is making it possible for us to give better segmented cohort pricing to customers, etc., etc. And that's really another next level of advantage that digital will unleash. On the efficiency side, yes, you can do more work with less people. That's really there. And as things go along, it might be even getting more, I think, escalated, and with AI coming in, this might become even more efficient going forward.
Thanks, Vinit. And since you all are business leaders, probably, so now these days, if you look at it, any financial institution, banks, mutual fund, insurance company, investor deck, you can see that lots of the digital flavor into that. In fact, HDFC Life, when I was also going through, I can see lots of the digital flavor into that. So now coming to the questions, Vinit, I'll start with you. Now, how do you, as a leader at the top, start looking at the business strategy and embed digital into that your business strategy level itself?
So I think that's a phase which all of us would have crossed. You know, where digital is part of business strategy. The question always is that how much do we keep on investing and how do we get and calculate the return on that particular investment that you're doing on digital? I think that's really the question, because you can invest a lot more. You know, you can see a lot of fintechs putting billions of dollars of money, and you know, so where do you stop and how much do you really go to? I think that's the real call that a company needs to take. And so for us as a process, you know, we follow a very diligent process of if we are doing something, what are the advantages we foresee, either in terms of cost efficiency or in terms of, you know, revenue growth or in terms of reach or in number of customers or customer satisfaction. So these are the parameters that we really define for ourselves, which help us figure out whether we should make that investment or not make that investment. And I think that's the part. And so we are like, you know, we are doing some transformation right now, and these questions are really relevant on, you know, how is it important? Should we go ahead full hog and do it? And it all comes in from saying that, you know, how much benefit as an organization we would have, how much benefit our customers would get, would their experience improve? If their experience improves, then, you know, we can expect more upsell, cross-sell with the customers and, you know, a much more deeper relationship.
Yeah. So same, I'll continue with Anshul. If you can talk about that, how digital is becoming a part of your business strategy.
See, I don't think the question in some sense is relevant today, because it's already completely embedded. You cannot even think of a strategy for building out an institution in the BFSI space without having technology as the core denominator. So, and what the other panelists said, I think it's more about what more can you do, how much investment do you have available, because with respect to customer experience, a more efficient product, and driving efficiency for profitability. And obviously on top of all this, ensuring that you meet all the regulation, safety, cybersecurity norms. So in that sense, it's given that you have to do all this. I think the decision making or strategy today is how much of it you're doing this year and how much of it you're prioritizing. I think we've gone beyond the fact that anybody will ever question or think ki digital karna hai kya. That phase is already gone, long gone.
Yeah. So this is right, and many times we keep on calling it that business study, digital study or business study. The line is completely blurred today, right? That's true, a fact. So now just moving ahead. So Anurag, you have been working lots with the bank and fintech partnership. You touched upon it, right? And how the technology play definitely, because you're a fintech and you come from the technology and the entire relationship, the integration is driven through the technology. But from the sustainable business growth per se, with respect to that partnership, what kind of the role that as a fintech you want to play with your REs, and as well as what kind of expectation that you have from the RE to build that sustainable growth, because both are investing to build a sustainable business, and it's many other cases are there that some of this partnership has not been able to sustain, while some has been able to sustain. What are the critical factors behind that?
So fortunately for us, digital is core. I mean, you know, probably banks can take, but as I think Anshul rightly said, now it's not a debate. Everybody wants to do it because they want to grow, and the customer themselves are changing. I think coming back to the partnership structure, I think the way REs look at the first principle is, of course, governance and compliance. That's like hygiene. I think because if you don't crack that piece, the profitability and sustainability doesn't happen, because especially when it comes to payments and banking, they are heavily regulated area, especially when it comes to credit side, and for right reasons. So the good news is, over a period of last 24 months since the creation of departments in Reserve Bank, many circulars have come which have kind of made things quite clear to both founders, I would say REs, as well as for investors. See, I think because that clarity is important, even though it probably can argue that little bit of entry barriers have gone up, but the important thing is that when you are investing money and you are investing in the project, you know exactly this is what it's supposed to do. So I'm like, whenever I address this question, many of our fintech events, in that, the first thing is that the governance and compliance is hygiene. I'm like, that's like, you just have to crack that piece first. And then after that comes about the scale and profitability. I mean, because, and of course now, most of the REs are willing to co-invest with you because they are also seeing value in generating large-scale outcomes here. Most of the REs have a team dedicated to us because the reason it's important because banks are large. It's not one department, you're dealing with multiple departments. So because of a dedicated department creation, it becomes easier for fintechs to interact. Naturally, the early ones had to bear the brunt because they have to meet more people. But most of the banks we talk to, digital is part of the core. And I think just to pick up the conversation you had with Vinny, that most of the market expect banks to now do this. So it's like you pick up any con call script after results, this become one of the question asked that what are you doing on this? And you know, almost every bank decks, this is there. So this is creating value. Now, for some of the products have already reached a profitability curve. Many other partnerships are still scaling up. So I would say from a good project, which was 2 years back, now the expectation is that we have to deliver value. And when I say value means it has to be hardcore customer adoption, deposits, lending, profits, and things like that. Ultimately, those are the things which actually will make this partnership viable. And even fintech industry has evolved a lot. We are almost now 14, 15-year-old. Naturally, you know, we have also achieved scale in certain areas, like if I talk about UPI or distribution businesses. Now the focus is more towards even beyond that, deeper products. Lending is right now a lot of focus area for most of the fintechs. How can we help REs to penetrate credit more? Just like we have done in payments. So I think, and I would just say now the PDP bill is coming. I'm like, it's already notified. We're just waiting for the operating rules. This will also create initial overheads for everyone. But I think in long term, it will create clarity. Because the last thing as a founder, I want that I have invested in something and then suddenly rule changes. And that creates a completely new cycle for both RE and us. So that's how I see this.
No, absolutely. And since you touched upon the DPDP, Digital Data Protection Bill, I think it applies to everyone. It's not from RBI or it's not from the IRDA, right? It's from the government and it will be applicable. So now touching upon the same, and I'll mix it with this data security also because that's also in the digital is quite a good concern, and from both from the RE perspective as well as from the customer perspective. So, Rao, maybe you can just give an insight that how do you try to balance of the security, the data privacy as a part of your digital, be it on your customer acquisition, customer engagement, servicing part of it. So how do you see the role of digital and technologies using and supporting the security and compliance?
I think one thing that happened in the mutual fund space is we never accepted cash. So I think that's a big thing for us because we've always been bank in, bank out. I think what has happened in the last couple of, especially since 2016, is that there have been a lot of payment frauds. So I think one thing which has happened is penny drop keeps coming in. But I think in terms of security, I think SEBI has come out with a very, very exhaustive list of do's and don'ts. I think the penalties are very, very severe. As I said in my first answer, it's one of the things that we have to do. It's the cost of doing business on digital. So that has to be done. There is no choice on that, yeah.
Thanks, Rao. So, and Anshul, from your perspective, because banks are also definitely very high on the data security, because I think, again, from the regulators tightening. But when you do the partnership, right, and then you are so aggressive on the digital agenda, how do you try to balance between the security and the compliance and with the continuity on the digital investment?
So see, there is no compromise when it comes to customer data or it comes to your own assets. So one is how you're creating your own infrastructure and protecting your core layer in the bank. That's one part. Because let's understand, the people who attack you from a cyber perspective, they will keep on evolving. You have to keep evolving to fight that out. That's one part of the game. The other part of the game is that since you're partnering with a number of fintechs, the same regulations which apply to you or the same standards of security which apply to you have to apply on them. So when we select a partner, one part obviously, the core part is whether the founders of that fintech company understand the game from a 360-degree perspective. See, UI, UX, customer experience is only one part of it. That's critical. But you can't get away from understanding the journey 360 degree, and you can't get away from a perspective that since the bank is through APIs or through an SDK, a part of your app or your own structure as a fintech company, the bank has to ensure that all the norms are met. So we do prior VAPT and the likes kind of various checks before we start a partnership. And like I said, this is an ongoing part. So depending on the size of the partnership, we have to ensure that we review it quarterly or on a half-yearly basis. I think while you can say that's the cost of doing business, but in reality, that is today a customer expectation also. Those days are gone where you lose some data or your system is down and the customer will forgive you for it. The customer will be on social media talking about it, and he's right in that sense, because you have to ensure that you live up to the standards of the customer expectation. So yeah, balance is a nice word to put it, but I think there's a lot of investment and hard work going into ensuring that we are able to deliver it as a regulated entity.
No, and in fact, my study, whatever I am interacting, the DPDP also gonna put lots of the strain on the purse of the bank, building that entire the identification of the data and the consent framework. I think it's gonna be tight. So that's definitely. And how do you see, Vinit? Definitely, everybody has echoed their point on the security, but from the insurance industry perspective.
So see, from an insurance industry perspective, I think it's as important as it is for any other entity, especially in the regulated side of the BFSI, because you have financial data of the customer, you have PII information of the customer. So we have to keep it secure. There is no option. Coming to there are attacks happening, so you have to stay ahead of the curve. Those points have been made, so I will not repeat them. Coming to the point of DPDP, I think, we have to understand the basics of this, and I think it's a good thing that we are getting the act, and we have to, put this, is that giving customer control of his data. Okay, that's the underlying piece. So you are, allowing him to give a consent if some data has to be done. It's not saying that you can't use data of the customer for, let's say, underwriting or risk analysis, etc., etc. You can do it, but with the consent of the customer. And also giving him right to, delete his data, right to forget, etc. All that right is coming in. So I think that's also a very important part of DPDP, because it puts a solid framework for how this goes and goes in the future, because more and more data is going to get available. And as more and more data is getting available, a customer would at times start becoming very jittery that okay, how do you know this? So if you have a consent mechanism, then I think it becomes very clear, the expectations are clear, and you're saying that customer is the king and he chooses what he wants to share. So I think that's very perspective, and it's also putting onus on the entities to make sure that they or their partners or vendors are ensuring that there is data privacy, data security, which is happening and is up to the mark. So I think that's important, and I would say that it's a good step.
No, I think on the lighter note, I think it's very, one incident happened that somebody else was selling me the insurance, the car insurance, and I have the car insurance from other partner, and the guy knew about my car brand also, and telling that your renewal is coming. So luckily he didn't say that, okay, you are running the insurance with that other company, so I'll give you a better rate. But the kind of information, so I think that's definitely DPDP is going to solve a lot of that issues for sure. So now moving to that entire the digital, we understood as a part of the business strategy, and the government and the entire the regulators ecosystem is also contributing to, and it's quite now more aggressive towards bringing some of the innovation framework with like OCAN already there, ONDC is in the framework already there, and then insurance IRDA, it's quite lots of the plan like Bima Sugam, insurance for all has already been mandated with the government. So how do you keep the organization ready to adopt to any new framework which is coming, or the new directives, guidelines comes from the government, and continue to sustain your growth part of it and maintain the profitability?
So one is, I think, keeping ourselves ready is one part of it. The other is, I think, these initiatives are all industry level initiatives. And like you mentioned, Bima Sugam, so, we were leading that entire committee, which kind of recommended that we should have a common platform at an industry level to do it. And the regulator, accepted it and has, taken it to the next level at an industry body to start establishing. So these platforms bring in a lot of efficiency. See, any such platform enables customer to, come and choose what he has to buy Bima Sugam also will have, servicing into it. And as these platforms grow and develop, they can build a lot more services for the customer, for the insurance companies to start, using, let's say, the national stack of data which is available tomorrow. Let's say health stack comes in. So integrations then don't need to happen at company levels also. It could be at one level. So these, really are steps in the direction which can create a solid, I would say, rail for the industry to grow. And actually ease out work for the industry, not just make it more complicated. So the point I'm making is that these kind of platforms can ease out. Today, maybe 50 companies are doing 50 different integrations and tie-ups. If you are able to create, a single platform, then, this kind of simplifies many more things for the industry. And it would really, help the industry become faster and more agile.
True. You want to add? Yeah.
No, I think in the MF space, I think we've always had a common KYC. And that's really, really useful. It's a really customer-friendly thing. So essentially, you do it once with one of the 45 registered AMCs, and you can go anywhere in the other 44 and do it. It's just completely PAN-based. So I think that's a big one for us. I think the other one, of course, is that courtesy the regulator, a lot of processes which were different across the industry, like a nomination process or a transfer process, a transmission of units process. Everyone used to have their own complications. That's all got standardized right now. And a lot of that is actually going digital and Aadhaar based right now. So I think we are in that sense much, much more slightly ahead of the curve as far as that commonality is concerned. I think the other thing, of course, is that there are multiple platforms now available. There's a AMFI sponsored platform called MFU, where you can go and actually buy units. It's essentially a digital ready platform. You can just get in. Anyone who wants to be a partner or wants to be a customer can just jump in. So I think, as I said, 96% of our transactions come online. So in that sense, we are very digi-ready. And again, like Vineet said, a lot of these things happen through the industry. So there are various committees and there are various ways we keep looking at trying to see what are the listening posts. So thanks to social media, we get a lot of feedback from customers on what are their pain points. And so there's constant improvement happening. And obviously, we have a very, very, very proactive regulator who keeps ensuring that we are on our toes on that point of view.
Yeah, and Anurag, coming to you, I think fintech has shown the way also to how to be part of such kind of an any government eco framework. So how do you see that fintech participating with this government framework, again, account aggregator, TSP, ONDC and everything, and it's contributing to the growth of the fintech industry?
So for us, it's bread and butter. Raghav was saying that standardization helps scale. And in mutual fund industry, I think not only they had common KYC, they also created this KRAs, which could facilitate that. The good news is on the banking side also, and thanks to the regulator, there are a lot of interaction happening so that things get standardized. Account aggregator is a classic case, though still I would say it is settling down. But when the bureaus came in, we took almost 4-5 years just to define a common data supporting standards, just to submit data. And just for trivia reasons, that format has not changed for the last 10 years. 2008, we created that format, where we still submit our bureau data on that format. When the account aggregator came in, the RIPET had already put up the standards, and the data format required for account aggregator is more complex because it is mutual fund, insurance, banking, payments, tax. So it's much more complex data standards, but they are there. Adoption is happening. They have already envisaged things like TSPs, so that which can help REs and FIU to access. So I would say this is a process. It doesn't happen over time. Like in the bank, if I look at banking domain, CKYC exists. CERSA is there. You ping, you get but naturally the KYC standardization is not yet done the way mutual fund industry. We are still figuring out. And if you look at the customer feedback on social media, this is one of the most talked about things. I'm sure Anshul can also add to it. Having said that, this is also one of the most risk-prone activity. Beyond a point, you just can't make it really simple because this is the impact of a wrong KYC is also fairly large, given that account takeover or all those incidents are linked to that. So I think for us, I think the good news is that fintech industry now get acknowledged in all of these forums. We get a seat to discuss. In fact, many of these meetings actually not happen in Bombay anymore. They happen in Bangalore because the regulators wants to go to the industry, which is, a good thing because, REs have a direct access to regulators, but fintech industry typically operates on a partnership structure. So our access to regulator is via our partnership banks or other companies. But now, given that, especially in RBI case, they have a dedicated department for fintech. So interaction is much more deeper. Right now, there's a lot of interaction happening on illegal loan apps. Most of the conversation is with industry association of fintechs, because that is where the major level of controls can be put in. While already the DLG guidelines are in place that LSP and DLA relationship has to be there, but the digital world is much more wide. The distribution is beyond. So how do you control that? So I think more and more interaction will only pave the way. It's already happening, can be done more. But yes, completely aligned with what Raghav said, standardization will help. Because the more the standardization, I mean, UPI could scale because standardized was there. Yeah. And an entity was there like NPC had to enforce that. Now, in account aggregator, Samati is playing the role. I mean, probably if now the PDP bill is coming in, but most of the tenet of the bill is already there in account aggregator guidelines, whether it's consent, revoking of the consent, and all that. So we need entities like this who can, create standardization. It doesn't, I'm like, while the regulator created the common standard, I'm sure KRA played a major role in enabling that for all of these mutual funds to ping and get access to that. Yeah.
No, thanks. So since we are into closing time, but I think we able to cover the different dimensions and rightly been put by the business leader that one definitely I think it's given that digital has become part of the business strategy, right? And if it's not, it has to become, in case if your organizations, it has to become a part of your business strategy. And not only looking from digital from the customer's experience, engagement, but also from the business parameter perspective, like growth and profitability, like you need to continue. And digital investment is also not easy, right? It takes money to build those digital infrastructure within your organization. So how do you make a balance? And that's also, I think very rightly pointed out that while you're building the digital, your agenda, security and the privacy is going to be critical, and the DPDP is, I think every leader is expecting that will have an impact, but it will have an impact for the good for sure. So thank you everyone. Thank you. Thanks for taking your time and spending time with us. Thank you very much.